Hey everyone, this is Hard Money Matt with Socotra Capital. Thank you all for joining our webinar today. The topic of discussion is the fast track to fix and flip success. Today I have a very special guest with us. His name is Hard Money Chris. He is my mentor in the industry. Would you please
Hi,
introduce yourself?
Hello, audience. Hello, Hard Money Matt. How are we doing today? What are we working
Fantastic.
on?
Fix and flips. That's what we're working on.
Awesome. Let's do this.
Let's get started. Okay, so fix and flips are a great way to enhance your investment portfolio. A lot of people will categorize them as sort of the gateway into real estate investing. A lot of investors start here and then they expand maybe to do, some rentals, commercial development, construction, all of that. A lot of that happens to start with fix and flip. So today, hopefully, we'll get you guys some good nuggets and help you with your endeavors, whether you're brand new or a seasoned investor. So let's start with the types of fix and flips. Historically, fix and flip is known to be residential by nature. And when I started in the industry, 2013, that's pretty much what everyone was talking about. Um, Give us an intro to fix and flips if you can, Chris.
Yes, the definition of fix and flip is exactly as it sounds. The idea is to buy a property that has upside and maybe do some touch up to it. Lipstick makeup was sort of the jargon that was used back then for just a very basic fix and flip that you could put some new paint, carpet, countertops, and then put back on the market in a fast amount of time and make some profit margin.
Right. And it's not, I guess it's not exclusive to just residential, right? These days, commercial properties are popular. I mean, I wouldn't necessarily call them fix and flips, but they do kind of fit into that category. Properties with high vacancies, maybe they need a little bit of improvements. People that are doing conversions, one like an office into a multifamily, right? We're seeing a lot of those these days as well. So let's sort of get into why people would want to do a fix and flip. One of the biggest reasons, of course, is everyone's doing it to make money, right? And so, you're buying a property, hopefully below market value, renovating it, and forcing that equity so you can sell it for a profit. And it is one of the easier ways to get into real estate investing. Even before fix and flips, you could. A lot of investors back when I started did wholesaling, right? That's finding a property and then instead of doing the fix and flip yourself, you get it into contract and then you sell that contract to a fix and flipper, right? So it is an easy way to get into the industry. And you don't have to manage tenants if you're doing a fix and flip. It's just a quick in and out. So it is something that a lot of newer investors want to get into. The sweet spot for a fix and flip. What do you think are the sweet spots, Chris?
Certainly buying it right. You make your money when you purchase the property. So a sweet spot is you're able to obtain a property that's kind of in the popular selling zone, if you will. That what I mean by that is a property that might not be too inexpensive, might be not too expensive, but is sort of run of the mill what people are buying. Uh, you know, Buyers in that particular market. So if it's a middle class kind of market and people are buying middle class houses, then that would be what I would call a sweet spot. On the other hand, if it's kind of a higher end neighborhood and that's the types of properties that people are buying, it would that would work also. But it's generally speaking, it it it's a it's a it's a property that is in desire, not a strange property, not an outlier. Those sit on the market longer, something that'll sell quick.
Yeah, so what with if I'm understanding you correctly here, speed is the name of the game for these. I mean, whether you're whether you're using your own cash or you're borrowing money to do these flips, I mean, it's all about time, right? If you have your money locked into a project for a long period of time, you're not getting your return or the time value of your money. If you're borrowing, it's going to cost you money, and when you're paying interest every month as well. So getting the project done as quickly as possible with I would say a lot of people look to minimize the cost, right? You don't want to have to do high-end upgrades for a neighborhood that doesn't need them, right? If you're in a starter entry level neighborhood, you're not buying the best upgrades or the best cabinets, the best kitchen countertops, and all that, right? So yeah, speed is going to be the name of the game. And you did talk about this a little bit earlier, Chris, but getting into it for the right price. When I started in the industry, there was a 70% rule. And to walk you guys through this, a 70% rule is you take what you believe the value of the property will be after you renovate it. In this example, let's say it's a $200,000 after repair value. ARV is what we call it. 70% of that number is the highest in terms of the cost that you want to get into the property. So $140,000 should be the total cost of your purchase and your rehab. A lot of people back into the number, right? So if you're shopping for a property, you see one, you're like, oh, this is a good neighborhood. I could sell this property pretty quickly. You look at what it's going to cost for you to renovate it. You back out the number, and then you have yourself the purchase price or what people would offer for this property. Do those numbers? What do you think about that number today?
Well, you just don't really want to be making less than 30% margin on a project because there's a lot that can happen. It's a moving target. You're trying to buy a property that might have some distress. You might not be able to, open up the walls, and there's always some surprises in a real estate project. So having less than 30% margin is not ideal. You have to pay realtor fees, you have to pay the hard money lender, you have to pay the all the inspectors, and then if you have cost overruns or if there's prices go up while you're in the deal, like materials, you don't have a lot of room to move or maneuver should you need to.
Right. And that is a good point too, because if you as an investor are also either an agent or a contractor, you can break this rule because the costs involved with hiring a contractor or selling the property, you guys can absorb it yourselves. Some people would call it, say, sweat equity, right? So instead of the number being 70%, it could be slightly higher. The rule of thumb that I used when I started was you take the sales price and take 10% off of that. That's going to be, all the miscellaneous title, escrow fees, the cost to sell the property, et cetera, et cetera. And then of course, on top of that, if you need to add in whatever cost it is to borrow, yes, the numbers can get, they can move on you pretty quickly. So, make sure there is enough margin. That leads us to our next point. So to make the most money, you want to make sure that you're buying there's a lot of considerations, right? You want to make sure that you're buying a property that where the budget isn't going to, there's not going to be a huge cost overrun. One of the main things that I see a lot of new investors uh, get into is, they'll scope out a rehab project and then they'll purchase the property, and then once they start work, they realize there's not enough money. They did not budget enough, and that can easily eat into your profits. Chris, have you seen? I mean, what have you seen in this instance? Are people mostly over budgeting, under budgeting?
Well, hopefully they're slightly over budgeting or padding their budget with some kind of contingency. And you really have to be careful or if perhaps there's a reason you're not being careful because maybe you like maybe you're a foundation specialist, so you're good at fixing foundations. You're a roof specialist, so you're good at that sort of thing. But if you're not, then you sort of want to hopefully stay in the middle of the road. Adding square footage can be additional risk. And coming back to the kind of the lipstick makeup that we were talking about is, if the bones are good and you don't have to move walls around as much and you can stick to the basics, then the faster you get in and out of the deal, the better.
Right. And make sure you are getting those property inspection reports, checking, structural issues, those could set you back. And one of the rules of thumbs that I used to hear is that you want to buy you want to look for the properties in you want to buy the ugly home on the nice street, because that's where desirability is. A lot of people are trying to buy in the best neighborhoods, right? And so you're going to get a lot of those entry level buyers that want to pick up your property. It ensures that you can sell it quickly. Now, if you get the nicest home in, say, a C neighborhood, you might have there might be some difficulties selling that property quickly. So definitely, account for that as well. So you did mention, considering the renovations, have a plan, assume delays, and prepare for contingencies. I mean, at I know a lot of these projects require having a good team, and having a good contractor is definitely going to help you succeed and give your project the best chance, right? A contract, if you're hiring, say, if you're hiring just like, say, handy people, or you're doing the rehab work yourself, you know it could set a lot of delays and could end up costing you a lot more. So I mean, having a good team, not just a contractor, but also the realtor and maybe a title or escrow agent. I mean, that's what's going to help you move these projects along seamlessly and help you save a lot of money. So let's move on to the different residential fix and flip scenarios. I mean, before we get into this, Chris, I know the $1 million question everyone always asks when they go to these events is, everyone talks about how much money you can make doing a fix and flip, but how do you actually find these properties? How do you find these projects?
Well, that's the magic question is how do you do it? Really, you need to get up early in the morning, it was told to me, and you got to get out on the street and uh, be looking under every rock. Now, uh, not all of us are able to jump into fix and flipping or investing in real estate full time, but for many of us, it's the eventual dream. And that is also what you're competing against. You're competing against these full-time investors. So, building your power team is essential. Building a network, starting with your own sphere of influence, everyone should know that this is what you're doing, and then, whatever that tactic may be. So, some folks are farming a certain neighborhood, they're going door to door, they're enlisting help from the title company to get in front of people. I mean, I get phone calls all the time from investors that are asking if I'm in distress and I'm trying to sell my property. So keep in mind that is what you're up against. I, having a personal relationship is probably, or, being able to start a personal relationship with whomever it is probably the winning tactic in terms of getting the deal.
Right. And I mean, I think you nailed it there. Network is really the important thing when it comes to finding fix and flips. I remember when I started in this industry, 2013. you know, there were a lot of people, that had been foreclosed on. And so there were a lot of REOs, a lot of auction properties, and I mean, people were just picking them up left and right. That market has changed substantially, and just keeping in touch with current market conditions, I think, is really what's going to help you. Like the next wave, I think, is really going to be the older generation that has to downsize or move out of their homes. I mean, there's a lot of properties that are dated that need renovations. Um, yes, you may be competing with a lot of people in this market, but there are still going to be people that want to get rid of their properties quickly. And there are going to be properties that don't qualify for bank loans because of that. So different residential fix and flip scenarios. I mean, aging population, that's definitely an opportunity. Turning them into rental properties as well, that's a pretty common one. So we'll get into a little bit more of that later. And I did want to touch a little bit on commercial scenarios. Okay, so these are a little bit of a different animal. In commercial scenarios, there's different things you could do. right? There's cosmetic updates, system updates, layout changes. I mean, essentially, you're buying a building with less competition because it is commercial. A lot fewer people are going to fight you to buy these buildings, but they do require a lot more work, right? A lot more knowledge, industry insight. Um, essentially a vacant property, let's say an office building, and you're buying that and converting that, or just a retail strip center that's been sitting there for a while. Maybe it's got one or two tenants. You could buy that at a discount, um, do some tenant improvements, stabilize it, and then refinance out. The BRRRR method, this was what a lot of investors did uh, pre-pandemic. The market has changed a little bit, but let's go over it because I think it is still very important. So you're buying a residential property, hopefully at a discount, and rehabbing it, and then you rent it out, refinance, and repeat. So how does that actually work? Okay, so let's use the numbers that we used earlier. Let's say the property you're buying is $120,000 with $20,000 in renovations, right? You're in for 140. So a lot of investors will either buy it cash or they will borrow. So if you're using a traditional type of lender, you're coming in with a little bit of down payment and you're borrowing the rest. Um, you're still in for about 140. If the property is worth $200,000 upon completion, theoretically you could go to the bank and get a loan for say up to 75, 80%, right? That would give you almost all of your cash out so you can use it to buy the next property. The key part of this is that you have the property rented. These days, with debt service coverage ratios, you may not be able to get as much money out, but I do think that this still exists. So, it is a way to grow your portfolio. The one of the ways to do this, though, in this market specifically, is to target maybe some multifamily properties, and then also, be flexible with the market that you're going into, whether it's a different city or state, that where you can, rent the property for a relatively high monthly rent, relative to the mortgage payment. Commercial scenarios, yeah. Chris, I know when you and I started in this industry, we did mostly just residential stuff. How has that evolved over these years?
Well, the residential arena has just become more competitive over time. So, not everyone has $1 million, but there's more people that have a few 100,000. So the low-hanging fruit, as we like to call it, is the residential fix and flip. And a lot of folks that were flipping or investing in real estate eventually are their goal is to move into commercial real estate, or they want to move in that direction. And what's really cool about commercial real estate is you create value by leasing a property out. So if you can obtain a commercial property and it's vacant, or you can raise rents, that's where you build your value. Building from the ground up is in our opinion, from the lender's perspective, has inherently more risk because you're buying land and then there's a time period that it takes to get the land up and ready to build. So, we have what's called soft cost and hard costs. These soft costs are paying for permits, entitlements, and these things can expire, or you're at the mercy of the local jurisdiction to get these approved, and it can take time. And if you're borrowing or at hard money rates, obviously this can deteriorate, decay your equity. So, having said that, it's still a dream for a lot of us to eventually be real estate developers. It's sometimes not the first person that gets it done. It's sometimes the second or third, and the first and second, they didn't succeed. And so with that in mind, some developers like to swoop in on the deal that someone had been working on, and that could be an opportunity for someone. Generally speaking, though, you want to build your skill set before you dive into this pool.
Absolutely. It is more of a black belt move or a black belt investor that gets these done. It requires having a lot of connections with the local, city, county, municipalities in order to get some, in order to get approvals on your land to build. And some of these investors will build it themselves or just sell it to a builder. So, it's one of those things where there's a lot of upside since there's not a lot of competition, but it requires a lot of training. There's a reason why there's a lot of families that kind of family developments or family developers. It's just kind of, it's a skill set that's passed along through generations, but it is definitely something that people could crack into. So let's get into some of the risks for fix and flips, and there definitely are risks. Starting from the top here, changes in market conditions. I mean, you can't predict this very well, I believe. I mean, the market's always moving. So what's the important thing is that you're going in quickly and you're buying it right. Because if you're going in quickly and buying it right with a good amount of margin, market conditions over, that fluctuate over, a matter of months aren't going to affect you as much, right? I mean, if a project takes you like 2 to 3 months to finish, start to finish, you're not going to get hit with these big market conditions. Delays that reduce profits. We touched on that a little bit earlier, but yes, it is going to cost if you're borrowing and you're paying interest for your money. The faster you can sell the thing, the faster you can get out of it, and the more money you can make. So make sure that you're buying in neighborhoods where things will sell quickly, right? And of course, structural issues, all those could add up for your cost and then eat into your profits. And tax considerations. I mean, everyone's got to pay the tax person. So I just count that as a win if you have to pay taxes. If you ain't paying taxes, it probably means you lost money. So let's get into fix and flip hard money loans. Chris here is my mentor, and he's trained me on pretty much everything I know about fix and flip hard money loans. So I'll let you take it from here, Chris.
Well, I guess in a perfect world, you have your own money and you're able to get out there and you don't have any pressure because you're not paying the monthly interest charge, but not everyone does have that. Or if they do, in order to maximize your effort, the idea by leveraging is that you can do more projects. So long as you're comfortable and you've built out your skill set and you're not running running into challenges, ideally you're able to shop for your next project while you've got one on the market that's ready to be sold and you've got another one that you're in mid construction on, so that you're able to keep your crews working and you're able to maximize your efficiency. So that's where it can be beneficial to borrow hard money. Before you borrow the hard money, I would try to, again, tap into all of your resources. Some folks like to use their retirement accounts and set up a self-directed IRA to borrow the money from themselves and pay themselves an interest rate, or able to obtain seller financing is a great trick. Ask the seller to participate. Oftentimes they'll charge you far less than what us hard money lenders will charge. And then a home equity line of credit. If you have equity in your real estate holdings, definitely get that money together. You always want the money before you need the money. Build your prospectus and start offering the opportunity to your friends and family, your sphere of influence, that they could participate in this way. Matt and I, that's how we participate. We put our money in the Socotra fund, and then we lend it to our client base, and that is how we participate. It's a team sport.
It absolutely is. And I mean, fix and flip hard money loans don't have to be complicated. It's actually a lot simpler than what people think. I mean, bank loans are far more complicated. So a fix and flip lender, generally we're going to look at the equity in the property, right? Purchase price, rehab costs, and the after repair value. It's going to be a shorter term loan structure with usually no prepayment penalties, somewhere around that 9 to 18 month term, depending on how much your rehab's going to cost. And fix and flip hard money lenders usually will lend both for the purchase and the renovation of the property. So it allows you to keep liquid and keep the maximum amount of cash in your pockets. So there's going to be a whole there's going to be a whole host of reasons why someone might get a hard money loan for a fix and flip, but we've really broken it down into just a few. Speed is probably going to be the main one. I know in 2014 to about 2017, I would get constant calls from borrowers that said, "Hey, I want to buy this property, but I got to compete against these cash offers and I just don't have enough money." And if you guys know, I mean, cash offers are usually quick closes. Sellers, when they see a cash offer and it's not that different than, say, pricing wise versus a bank offer, they're going to pick the cash offer 9 times out of 10. And most of the times it's just because it's quick, right? You don't have to, you're not beholden to a banking institution to get your property sold, right? So we would advertise that we are as good as cash because we can move quickly. And Chris, I'll let you introduce our program, the Turbo Close.
Well, certainly it's a bit of an art when you're submitting cash offers. So I remember in the old days where, someone would submit a cash offer and then once they got into contract, they disclosed that they were getting a private money loan, and then we would get all kinds of calls and have to vouch for the deal. And so that's an art that you'll have to perfect. Typically it's nice to be able to close a loan during the contingency period. So getting your hard money lenders are part of your power team, and you want to get them ready to move and get your realtor on board with what you're doing and let the pros do the job for you. We were able to oftentimes provide a qualification letter so that you can go out and submit your offers. When you submit a cash offer, next thing they're going to ask is, where is your money coming from? Where's your proof of funds? And then that's where we like to get in and help.
Perfect. And the other reasons why you would borrow to get hard money are, of course, if you have a poor credit history. Poor credit history, is common. Not everyone's going to have perfect financials or credit at all time. And of course, taxes. If your income streams don't add up, banks oftentimes they look at how much you make and then they go, okay, well, here's how much I'm going to lend, right? As a private lender, we focus mostly on the equity of the property, and so we could structure a loan where a borrower, even though they can't show that even though they can't show a lot of income, if they have other things or we build in a reserve, we can make the deal work. And then also one of the things that's not on this slide is the condition of the property, right? So some of these older homes won't qualify for a bank loan. Once the banks send out their appraiser and they see that, say the windows are a certain type of windows, or the wiring was done before a certain year, they may not give you the loan at all. And so what I like to tell our borrowers is that you're using hard money to either make money or save money. There's no other reason why you would borrow hard money. And in the case of a fix and flip, it's going to be to make money.
The other challenge, hard money, Matt, is banks don't like to get paid back a month or two after they make the loan. So
Right.
it's just difficult to get a loan product from a bank that fits the fix and flip needs.
Right. And of course, there's pros and cons to hard money. Speed's probably going to be the main thing, and it allows you to, of course, finance multiple properties. They're not all based on the credit score, personal financial histories, or anything of that sorts, right? So, again, as long as there's equity there, we'll do it. The cons, of course, are what we mentioned earlier. It does cost more than a bank loan. Um, but you're kind of paying to play at that point, right? Because uh, oftentimes without hard money, you probably wouldn't be able to close on some of these transactions anyways. And so it is not that much more expensive than a bank loan, but it does provide you the benefit of surety of closing, winning the deal, and then and yeah, I mean it helps you get into the deal. So that's what's important about it. But yes, there is also a disbursement process for the draws. So you want to make sure that as you're familiar with your lender's process for draws. Usually, I mean, usually they don't take that long. I mean, we've been doing this for well over 15 years now, and so we have a pretty seamless process. It gets done pretty quickly. So just to get into some of the loan programs that we have here at Socotra Capital, our flagship product is going to be the Turbo Close. That's closing in 5 days or less. It's an easy application, right? So I mentioned really we just care about, the equity. So property address, so we can at least see where it is and what it is, purchase price, the rehab budget, and then after repair value. If those numbers line up, you're probably going to have a deal. One of the benefits is that at Socotra Capital, we do everything in-house, and that's sourcing transactions. We have our own money. We've got our own processing team, doc draw team, and servicing team. What that means is that after closing, if you're looking for draws, you're looking for a payoff, you just call us back. It's nice and simple and easy. It's a one-stop shop. Chris, I know when we started, we mostly only did fixed and flip loans, but we've expanded these days. I mean, what are the proper what are the popular products that we have these days?
No question, the Turbo Close is our most popular product, hard money, Matt, just because it's one of one loan that really sets us apart. There's not a lot of hard money lenders that can close in 2 or 4 days, 5 days. So yeah, I think one comes to mind in Las Vegas where it was a 2 day close. Ex professional athlete had to drive all the way across the country just to sign. But aside from that, we also do the bailout loan and we do commercial tenant improvement loan, as well as all the other different commercial bridge loans and residential hard money loans. We have an SBA 504 loan where we make a loan with the CDC. That's a longer term loan. Loans to foreign investors, also a longer term loan. So usually when you're borrowing hard money, it's an interest only loan with a balloon payment in 2 or 3 years. In some cases, if there's a cannabis property or perhaps a gentleman's club or some of those different specialty asset types, it's difficult to get financing. You have a multifamily or even an office building now, all of a sudden it has been hard to get financing for. So all of the regular commercial and residential bridge fix and flip loans, but then we've also been able to provide a loan for those that are selling a house and buying a new house to live in. That's called a consumer bridge loan. Ground up construction for residential, both consumer and investor, another type of loan that's really difficult to come by. And line of credit, a hard money loan where you're not paying the interest on the money until you borrow it. So if the rate's high, but you have a line of credit, that's really nice so long as you don't have to pay the rate. And when you're using the money, hopefully you're making money with it. Those are a few that come to mind.
Boy, that's a lot of different programs. I mean, I'd say we've expanded quite a bit since we started, and we always follow the market trends. We're looking for different opportunities to lend as well. So if you guys ever have any questions, I urge you to give us a call. I do appreciate everyone who joined in on our webinar today. And, we are on all the social platforms. So feel free to look us up. We have a lot of market insight. Chris and I, we've been doing, I'd say combined well over 200, 200 to 300 flip loans. Geez, it's been a while. But yeah, we're absolutely always available to help with or answer any questions you guys have. So I do appreciate everyone joining us today, and thank you.
Thank you so much. Hard money never sleeps. Great job. Thank you.